Hey guys, welcome in this new video. I hope that all of you are doing great. So in this video, we will talk about price action, and I'm going to share with you guys basically different ways of how you can improve your reading of the chart and make sure that you understand what you are looking at. So this will be a very valuable video, I think. So I'm really excited to share this with you guys. So just before that we start, well, as always, please leave a like under the video. That supports the channel, and make sure that you are subscribed as well so you don't miss any new videos coming up. So as I said, in today's video, we will talk about price action. Now, that is a topic that is extremely important for you guys to master in your trading, because at the end of the day, that's pretty much what we trade, right? So as a trader, your job is to go on the market, go on the charts, understand what's actually going on, and then you will be able to take decisions based on that. So it's really, really important to understand price action, the nature of it, how the market is structured, how it moves, why it moves like that, and all of these questions need to be answered. So it can go a lot further than just, for example, looking at technical analysis or different tools that you could use to read better the market. It's not even about the tools, and that is something really, really important for you guys to understand. It has nothing to do with the trend line or Fibonacci and things like that. Of course, these tools can be useful, but the main and the most important thing is to understand what the price in itself is actually doing. So in this video, we will go on the charts. I'm going to show you guys one example, and you will see that just with this one example, which will be gold, we will be able to understand a lot of things about price action. And I'm going to give you guys a lot of questions that you can ask yourself when it comes to your own trading and the chart in itself that you are looking at. And you will see how powerful these questions are. And if you are able to find the answers of these questions, you will see that it will help a lot your trading. So with all of that being said, let's jump on the charts and well, let's take a look at this. Alright guys, so we are now on the chart. So as you guys can see, we are on the chart of gold on the long term. And as I said, I'm going to use this chart to give you guys many examples of what it really means to understand price action, to understand the nature of a market, and how can you actually capitalize on that, and how it's going to help you dramatically in your trading. So we are on gold on the monthly chart. So as you guys can see, this chart goes back all the way to 1980. Now, obviously, that is not really the beginning of the chart. Gold was tradable before that. We just don't have the data for it on TradingView, but nonetheless, we can still do our work with that. So just to put you guys a bit in context, the way that the chart of gold is that it basically kind of looks something like this. So, here it was not doing much back in the days before 1980. Then at some point in the 70s, all the way to 1980, we got a huge impulse up. So a big uptrend that we had here. It doesn't look big on the chart like that, but it actually is big if we look at it from a percentage standpoint. So it started around $35 if I remember correctly, and it went all the way up to $850. So in terms of percentage, that's a massive move. Even if it doesn't look that big on the chart, it actually is really massive. So we had this up move, then we got this big correction, which lasted about 20 years. So during that time, well, as you guys can see, the price did not do much. We just have been going up and down. And then we got another big up move on gold. Then we got another period that the price did not go anywhere. And recently, we just have been making a new all-time high on the chart. So the first reason why I'm using the chart of gold is because we can clearly identify the different periods that this market has. So sometimes we will be in a uptrending strong market, and sometimes we will be in a corrective quite slow market where the price does not go anywhere. And so just understanding the differences between those two periods to begin with is actually something really important, not only for this market specifically, but for all markets. So whenever that you look at a chart, you can ask yourself the question, are we in a impulsive or are we in a trending market, or is it more in a correction? Is it more in a range? And that question alone can save you a lot of trades, and it can just improve your trading dramatically. So if you actually take the time and ask yourself the question, what's actually going on the market, right? Look at the chart and ask yourself, what's happening? Are we trending? Are we going somewhere, right? Is the price actually moving, or is it just going sideways? Is it just doing nothing? And believe it or not, a lot of traders will try to trade within these periods, and then they will take a lot of losses and they will be like, oh, Anthony, it's not working. I don't understand why I'm not profitable. Well, that in itself could be the reason. Why bother trading during corrections, right? That's the point. That's the question. Why would you even try to trade within these periods? What's the point of doing that? Why not simply wait for these big uptrending market to begin and then trade, right? Like, it's so simple, it's so basic, but I guarantee that a lot of you guys are not doing that. You know, you don't look at it from this perspective. A lot of people simply go on the chart, they look at the price, and then they already ask themselves, okay, what can I trade right now? Right? They kind of go on the chart and they already look for opportunities. They're kind of like, they're forcing trades, they're forcing to see something on the market when it might not even be there. Whereas if you just kind of take a step back, understand what you're looking at, and then realize that these markets have different periods, then all you need to do really is wait for the right period to trade and go with the flow, go with the trend, and just kind of ride the move. I know it sounds simple, but that in itself, understanding the differences between these two types of price action can make a tremendous difference in your trading. So personally, in my trading, what I try to do is look for these big moves where the price goes really, really strong, really, really fast. And you know, these are just the best trades. So I don't try to trade within the corrections. I haven't traded gold in a very, very long time. And the reason why, it's simply because it was going sideways. It was not giving me any clear intention. It was not showing me any clear sign of where the price was going. Now that we broke to new all-time high, I find that very interesting. Why? Well, let's look at what happened the last time that it broke to new all-time high, right? So this was all-time high back in 1980, which we broke that in 2007, 2008, around there. So look at what happened. We broke to new all-time high. We made a little pullback right here, and then we continued the uptrend. So what do we have right here? Well, do we have something similar? Maybe, right? So this could be the beginning of an uptrend. We broke to new all-time high. We are getting a pullback, which kind of reminds me of this little piece right here. And then if we get a continuation, well, who knows? This could keep going up for quite some time. Every time in the past that gold has broken all-time high, it always has been a big sign of a bull market, and we always had a continuation. So I'm just using the chart of gold, as I said, as an example, but this also illustrates something really important for you guys to understand when it comes to price action. So whenever that you look at a chart, you need to be able to identify what are the important levels to look at. And when I say important levels, I'm not talking about support or resistance, for example. I'm talking about key levels like that, which have a big significance for the market. So all-time highs or all-time lows, or a big high or a big low of a specific pattern, and things like that. And so once you understand the nature of the market and how it moves, then you will be able to kind of see these areas and see the potential future ahead. So if we understand that every time that we break to new all-time high on gold, we get a continuation at some point, well, that in itself is a good starting point to look for trades after that, right? So if we understand that gold can keep going up, it doesn't mean that it will. It just means that it is possible that we can do that. Well, what we will do is then look for buying opportunities on the lower time frame, right? And so that sounds super simple. That sounds like the easiest strategy in the world, right? But does that work? Absolutely, right? And so the key here to understand is that price action in itself is not so complicated. It is not the hardest thing in the world. You just need to know what to look for on the chart. And that's the problem. A lot of people don't have the right methodology. So they go on the chart, they go on short time frames already. So that in itself is a mistake. So they go on the chart and they just look at the 1 hour. Well, the problem is that if you just look at the 1 hour, how do you even understand what you're looking at? right? Like just look at this chart. It's just way too messy. It's not clear. You don't have any information with this chart. You need to start on the higher time frame possible, right? That is really, really important. Then if you want, you can make your way down to lower time frames, but you need to start with having the right perspective. So that is one mistake of methodology that a lot of people do. Then another mistake is that instead of just looking at the price action, just like we are doing right now, and trying to understand what you're looking at, people already jump to technical analysis. So they don't even take the time to just look at the price in itself, and they already start to draw their trend lines and their fibs and their rectangles and all of that things on the chart, right? I was going to use another word, but let's just say things if we want to stay politically correct, right? So people make these mistakes all the time. And so as you guys can see, the way that I do things is really different than what a lot of people do. So I don't already kind of just put a lot of things on the chart. I can remove everything out of the chart. And right there, I have a much better perspective already of what I am looking at. And so, as I said, if you understand the nature of how something moves and what happens when we get to key areas, this in itself will improve dramatically your reading of the price action. And then something else as well that you can do, at the beginning of the video, I said that it's good to ask yourself a lot of questions. And so, you know, being curious is a great quality of a trader. So myself as a person, naturally, I think I'm pretty curious. I like to understand what I'm looking at. I like to just kind of, you know, if I have a problem in front of me, I like to kind of dissect the problem and try to understand everything. Well, it's the same thing for trading. So when I look at a chart like this, I ask myself a lot of questions to understand what I'm looking at. So it's really important to do this, you know. So why the price in about 10 years, you know, kind of did from $35 to $850. What happened during these 10 years? What made the price go up so much and so fast, right? What's the reason? What was the trading environment back then? Who were the big players? Who made a lot of money catching these moves? How did they trade these moves? All of these questions are valid to ask, and you can find these answers with internet. And that's the beauty of it. And as I said, I'm not going to give you guys all the answers in this video because it would be too long, number one. And number two, a lot of that kind of thinking is reserved for the course. So I'm not going to go too much in details here, but you guys can find these answers yourself. Or if you want, you can take the course, right? At the end of the day, information is out there. You just need to kind of go for it, if that makes sense. So what happened during these 10 years for the price to go up so much and so fast? And then you can also ask yourself the question for the corrections, right? Why, after going up so much and so fast, in 1980, suddenly it stops to go up here, and then for 20 years the price does absolutely nothing, right? How is that even possible? What happened during that time for the price to react like that? And then, well, what made a new bull market start? What were the conditions back then? How was the economy doing, right? All of these questions can be answered. You just need to be curious enough. You just need to make your research on the internet and or in books, for example, and you can find these answers. And I guarantee you that if you understand the trading environment of what you are trading, it will improve dramatically your trading. I cannot stress this enough. If you truly understand what you are looking at on the chart, if you truly understand what's going on behind the price in itself, this will change your trading forever. That is the most important thing that I do for my own trading. I try to simply understand what I'm looking at. When I say understand, it's about the market in itself, it's about the price action, and it's about its environment. It has nothing to do with technical analysis. It has nothing to do with placing lines and rectangles all over the place. It's a complete different game that I'm playing. And so the important thing here to understand is that you kind of need to leave the average retail trader mindset, right? So a trader is not someone who just goes on the chart, places a few lines, and then take trades based on that. Like it's more advanced, right? If you want to be a professional, you need to take things seriously. And this begins with actually understanding what you're looking at and not just going to place tools, because like that's the easy way out, right? Placing lines over the charts and kind of taking trades based on that, it's the easy way out. You're not doing any research, you're not doing any thinking, you're not even trying to understand what you're looking at. Like, this is for beginners, you know, this is noobs that do that. Professionals do the opposite, right? They understand what they're doing, they understand what they're looking at, they know what can happen on the market, the different possibilities, and then they just kind of wait for these scenarios to play out. It doesn't even you don't even necessarily need to implement technical analysis within that. You can if you want to, and I have certain tools that I use sometimes which are more technicals, but it is not even the basis of my trading, because if you understand in the first place what you're looking at on a chart like this, you don't necessarily need any tool to give you trading ideas or even, you know, buying or selling setups. So that is really, really important to understand. So I hope that this gives you guys some clarity. As I said, my goal with this kind of part of the video was really to make you guys think, to make you guys, you know, just do your own research, to you know, make your curiosity even bigger, because that is really, really important. And that is what I found that makes the biggest difference between a noob trader and a professional. Alright guys, so I hope that you enjoyed the video. Make sure that you let me know in the comment section below if you would like to see more of these type of videos in the future. I try to bring you guys as much value as possible, make you think as well. That is always my goal with the videos that I create. It's not just to give you all the answers right away, but it's to make you guys think, to make you guys use your brain so that you can understand it by yourself and then apply that in your own trading. So if you did enjoy the video, as I said at the beginning, please leave it a like. I would really, really appreciate it. And well, that's pretty much it. So on that, take care, trade with care, manage your money well, and I will see you guys in my next video. Bye bye.